Welcome back to the Deep Dive. If you're looking for a shortcut to being well-informed on the biggest shifts in enterprise tech, you have definitely come to the right place.
We are diving straight into some numbers that just sent a shockwave through the cybersecurity sector.
That's right. We're talking about Rubrik, ticker RBRK. They released their Q3 fiscal 26 results after the bell on December 4th.
And look, this is a crucial one because these results were not just a standard beat. This was, I think, a fundamental inflection point that caused an explosive re-rating of the stock.
So our mission today is pretty clear. We need to analyze the quality of these numbers, understand the big strategic pivot they're making into AI, and figure out what their significantly raised guidance implies for next year.
Let's do it.
Okay, let's just start with the headlines. I mean, when management calls a quarter their best ever, you have to pay attention.
You do. And they didn't just, exceed expectations. They completely dismantled them.
Right. It's so rare to see a company beat by this much on both the top and the bottom line and show this kind of operating leverage all at once.
The execution was flawless this quarter, and the market saw it immediately. So let's start with the top line. Total revenue.
Okay.
It came in at $350.2 million. That's up 48% year over year.
Which is a huge beat. That's about 9% above what the street was looking for, right? The consensus was around $320 million.
Exactly. But, the real shockwave, the thing that signals a real sustainable change here, was the bottom line.
And this is where it gets interesting. Analysts were all bracing for a loss. The consensus was, a negative 17 cents per share on a non-GAAP basis?
And Rubrik reported a positive 10 cents.
Wow.
That's a massive 27-cent beat. And crucially, this is the company's very first positive non-GAAP quarterly profit ever.
And for anyone who's not deep in the weeds on this, flipping to non-GAAP positive is that key signal institutional investors look for. It tells you the underlying business is healthy and efficient.
It signals they've crossed the threshold into sustainable scale.
Absolutely. Yeah. So you have this huge profitability surprise paired with massive growth. And we saw subscription ARR, that's annual recurring revenue, hit $1.35 billion.
Growing 34% year over year.
That combination, the 34% growth and now being profitable, that's the whole re-rating story right there.
It is. It proves they've reached the scale needed for their model to just, churn out profit. But the next question is always about the quality of that growth. Was it sustainable? Or was it just one or two big deals?
That's the critical question, isn't it? So how sustainable is that sudden acceleration? Let's drill into the net new ARR.
The underlying engine is humming. I mean, net new subscription ARR, that's the fresh revenue added this quarter. It hit a record somewhere between $94 and $95 million.
And the consensus was way lower, around $69 million.
Exactly. That 36% delta versus the consensus tells you deal flow is accelerating, the sales team is really executing.
And the type of customer they're landing.
Yeah.
It confirms they're still focused squarely on the enterprise.
Right. It does. Their base of customers paying over $100,000 a year in subscription ARR that grew 27% year over year. It's now at 2,638.
And those big customers are the bedrock, making up, 86% of the total ARR?
86%. And even more impressive, they added 23 new customers paying over $1 million in ARR this quarter alone. That high-value group grew by over 50%. This isn't just growth. It's a high-quality, top-tier growth.
Okay, and what about expansion within those accounts? The net retention rate, NRR, was over 120%. That's fantastic. But what's driving it?
So this is where the security story really comes into play. The adoption of their, higher value security products contributed over 40% of that NRR expansion.
40%? Wow.
Think about that. Almost half of their expansion from existing customers is from cross-selling deeper into the security stack. It shows their whole strategy is resonating.
So moving from just data protection to a full cyber resilience platform, it's working.
Yeah.
And it's sticky.
It's stickier than ever.
So let's circle back to that financial leverage. I mean, this profitability flip didn't just happen by accident. What levers did they actually pull?
Well, the big question is always, can they do this without sacrificing R&D? And Q3 suggests, yes, they absolutely can. The non-GAAP gross margin increased by about 360 basis points year over year.
Hitting, 82.8%?
82.8%. That is a very, very competitive gross margin for a software company at this scale.
But where does that operating leverage really show up most clearly?
I'd say in the contribution margin, the subscription ARR contribution margin turned positive. It's now at 10.3%.
And a year ago.
A year ago, it was negative 3.3%.
Wow.
That swing over 13 percentage points, that is the definition of an inflection point. It means the cost to acquire new subscription revenue has fundamentally dropped.
And I think the most visceral proof of all this is the cash they're generating. The free cash flow was, it was phenomenal.
Correct. They generated a record $77 million in free cash flow.
That's nearly 5 times the $16 million from the same quarter last year.
It is. It validates the whole economic model post-IPO. Management was right to call this combination best in class. It just gives them immense flexibility going forward.
So that's a pretty comprehensive and frankly glowing financial story.
Mm-hmm.
But the narrative on the call went way beyond the numbers.
Oh, absolutely. The CEO, Bipul Sinha, he kept framing Rubrik as the security and AI operations company.
Right, driven by that assume breach mindset.
Exactly. If you assume a breach is coming no matter what, then resilience and how fast you can recover are the only things that matter.
I noticed that specific line he used about AI, that it poses, 100 times more risk?
But also offers 100 times more opportunities. It's brilliant framing. It positions cyber resilience as the essential ticket you have to buy to safely play the AI game.
And it seems like they're translating that narrative into actual products that are accelerating. The identity business, for one, is ramping incredibly fast.
Incredibly fast. The identity resilience line reached about 20 million in subscription ARR in just over 3 quarters.
And management was saying this is coming from net new budget, which is key.
That's the critical part. It targets the CISO, the Chief Information Security Officer, a totally different buyer with a different and often growing security budget.
Right.
They're not just selling backup anymore.
They're selling a specialized security solution to the CISO.
Exactly.
Okay, so that's a strong adjacency. But the newest push, the one that analysts most excited about, is this Rubrik Agent Cloud, or RSC.
This is a completely new category, and it addresses a huge emerging governance problem. Enterprises are deploying all these internal AI agents.
Built on things like Amazon Bedrock or Microsoft Copilot.
Right, and those agents start doing things, sometimes on their own, touching sensitive data, and there's no real control.
So what does Agent Cloud do? Beyond just being an undo button for AI.
Well, the agent rewind is the key, but it's more than that. It's monitoring, it's policy enforcement, it provides the guardrails.
So if an AI agent makes a malicious change or accesses the wrong data?
Agent Cloud can instantly roll back that specific action, the configuration, the policy, whatever it was, back to a known good state without taking the whole system down. It gives security teams an audit trail for what is otherwise a total black box.
Which moves the conversation from just recovery to actual governance.
And they showed deep integrations already to prove it's real. They mentioned Agent Cloud for Amazon Bedrock Agent Core and for Microsoft Copilot Studio.
So they're positioning themselves as the control plane that sits on top of all these different AI platforms.
And that's the goal. And it seems to be helping them win business from the legacy players. They specifically said legacy replacement bookings accelerated.
They gave a couple of powerful anecdotes.
So they did. One was a win at one of the biggest banks in the world. Replaced a vendor that had been there for decades.
And the other one.
A Fortune 250 firm that displaced a 15-year incumbent. And in both cases, the win was attributed to Rubrik's speed of recovery. The old guys just can't provide that granular, verifiable recovery that you need when every minute counts.
Okay, so now we have to look forward. This huge Q3 paved the way for a raised outlook. What did they say about the rest of the year?
Well, the outlook was raised across the board, which just poured gasoline on the market rally. For the full fiscal year 26, they raised subscription ARR guidance to between $1.439 and $1.443 billion.
Which translates to about 32% growth year over year.
And total revenue was raised substantially to over $1.28 billion.
And given the cash conversion, I'm guessing free cash flow guidance went up too.
It did. Raised to between 194 and 202 million for the full year. So they're growing fast and funding themselves.
That all sounds fantastic. But the CFO did give a very explicit warning for fiscal 27 about something called material rights. Can you unpack that for us? It sounds like a potential drag.
This is a really crucial nuance. Material rights is basically non-recurring revenue. It's tied to old legacy contracts, like one-time service fees when customers switch from old appliance models to the full cloud subscription.
So it's not bad news, it's just accounting cleanup.
Precisely. Because their cloud transformation was so successful this year in FY26, they recognized a lot of this non-recurring revenue. That's going to decline a lot in FY27.
So the reported total revenue growth number might look slower next year.
Exactly. The headline number might look a little messy for a quarter or two because that one-time boost is gone. But the core metric, subscription ARR, will still be robust. The key is to just watch the ARR growth, not the headline revenue.
That is helpful context. So heading into the print, the stock had actually underperformed its peers. It was kind of set up for this. How big was the market's response?
It was decisive. The shares closed up 22.5% the next day.
On huge volume.
3 to 4 times the average volume. That tells you big institutional money is moving into this name.
And the options market lit up too.
Oh, yeah. Call buying spiked something like 154% above average. Analysts all rushed to raise their price targets, and they all focused on 2 things: the profit inflection and this differentiated AI plus security story.
Which sets the stage perfectly for our final segment. Now remember, everything we discuss here is for informational purposes only. We're just analyzing the data. This is not financial advice.
But if we were to translate this explosive quarter into a high-conviction trade idea, the thesis is pretty clear. Rubrik is shifting from just a high-growth data protection vendor to, I think, a foundational, profitable AI infrastructure platform.
And they are executing demonstrably better than the rest of the cybersecurity sector, which has been really choppy lately.
Exactly. So given that outperformance, the trade we're proposing is a pair trade.
Okay.
You go long Rubrik, RBRK, and short the cybersecurity ETF, HACK.
Interesting. Walk us through shorting HACK. I mean, that's a whole basket of established players.
The rationale is about isolating the alpha. Rubrik has just decisively outperformed that ETF. So by pairing a long in RBRK with a short in HACK, you're betting specifically on Rubrik's idiosyncratic success.
So you're capitalizing on the belief that Rubrik is gaining market share and mind share at the expense of the broader sector.
Exactly right. And it also hedges you against a broad tech sector pullback because you're shorting an ETF full of tech stocks.
Right.
But you maintain that full exposure to Rubrik's accelerating execution. You're betting it's the new leader in AI-era cyber resilience.
It's a fascinating idea.
So in closing, I mean, this quarter really was the pivot. We saw the financial inflection moving Rubrik from just another high-growth IPO to a credible, profitable platform company.
And the next big catalyst will be seeing them actually monetize Agent Cloud and continuing to scale that identity business.
That's right, proving that AI governance is a real revenue driver.
So what does this all mean for you, the long-term observer? Considering the raised guidance, the focus on execution, I mean, sustaining over 30% ARR growth while generating record free cash flow. What multiple do you assign to a company that's crossed that profitability line and planted its flag right in the middle of the emerging AI governance space? That is something fascinating to mull over.
Indeed it is.
Thank you for joining us for this deep dive. We look forward to continuing the conversation next time.